Hey, it's Ted McGrath. Going to jump in here, and we're going to talk about a little bit of manipulation that might be going on with MSTR, and I'm going to share with you some data on that. Also, we're going to hear from Tom Lee of the glitch in the system on October 10th and what caused that. And we're also going to talk about bull market, bear market, always chance of a bear. So anybody should take notice of that. I don't think we're going to go into a bear. I still think we are going to have a rebound, even though we are at lows right now. And so let's see what happens, and let's hear from Tom Lee. Also, in this marketplace, if you are watching your stocks go down or watching things go down, none of this is that I'm sharing with you right now is tax advice, financial advice, or legal advice. Always do your own research. But I can tell you right now that during this time, the one thing that gives me more control is the idea that I actually get to trade during these times and pick up shares. So if you want to learn how to trade, if you want to learn how to read the technical charts, I've got a new book called Money Game that came out. I also give you my free video training on how I'm trading every single week. And it's the one thing that gives me comfort during times when things are dropping, because I know I can pick up shares at a low cost. So if you want to learn it, it's free. Snag it down below. During times like this, it sucks to watch the markets go down. But if you have a strategy to pick up shares at the bottom, like I do, it doesn't feel good that the stock market's down, but you can still win when it's down. So when it rebounds, you win bigger. Okay. So snag it down below. It's all free down below. Hope it serves you. Now let's get into what Tom Lee is saying about this marketplace right now. And I know he shared predictions recently that have not been on point at all, but let's just take a look at the data here. Okay.
I think I'm going to kind of add to what Steve said. You know, I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stable coin's price varied from other exchanges. It actually, stable coin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, you know, Brian, I am aware of names, but because you know, I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, you know, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stable coin rather than rely on internal quotes. So, but this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, you know, things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Yeah, I mean, Brian, it is. I mean, for instance, in 1987, portfolio insurance was the quote glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. You know, in 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and like overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is not kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage in crypto.
Watch what magnesium does.
Whoa, let's get rid of that, huh? That wasn't part of the show. So anyway, funny advertisement. So if you're just joining us, I mean, you know, Tom Lee's talking on there, the fact that there was a glitch in the system when the whole liquidation happened of $19 billion on October 10th. There's software glitches going on. There's things that shouldn't have happened that did happen. The stablecoin price dropped on stablecoins that are $1 and are supposed to stay at $1 to like 67 cents. There was an automatic liquidation feature there where when account falls below a certain point, there's an automatic liquidation. So a lot of people got liquidated when they shouldn't because of a software glitch, and the industry's recovering. And there's also, you know, there's massive manipulation going on right now. It's just happening. Here's another example of this right now. This is a great post from James from Invest Answers and from this guy Gordon. He says, you know, at Gordon Gecko is his handle. He said, I recently had coffee with a London-based hedge fund manager while we were both staying in downtown Dubai. And he says here that he said that a lot of big fund managers are conspiring against Michael Saylor because it will make them look bad if Bitcoin keeps doing well and they were late to the party. So in an attempt to keep their investors happy, they're pulling out all the tricks to keep Bitcoin down. And then it goes on. If you look here, let me get back and show you the rest of this from James at Invest Answers, which is really good commentary on this. It shows specifically here that MSTR was the scrappy innovators from James, letting normies get Bitcoin exposure via stocks. Now hedge funds and ETFs are jealous. It's going too big, too fast. Wall Street loved the profits from MSTR's wild rides. It's up 2,000% in 5 years, but hates the risk to their stable empire. They're pushing MSTR to quote unquote normalize, act more like a boring fund, which dilutes Saylor's all-in Bitcoin bet and hands control to institutional players. This is Wall Street flexing to protect their turf. MSTR disrupted the game by making Bitcoin mainstream through stocks, but now the big boys want to rewrite the rules to get a piece. They missed Bitcoin early, so now many believe they want to take it down so they can fill their boots and cheap pricers. Saylor fights back, calling MSTR a quote-unquote hybrid business, not a fund, but the pressure's on. For regular folks, it's a reminder when you play in Wall Street's casino, they can always change the house rules mid-game. So there's no doubt there's manipulation going on in the marketplace right now. To me, this does not change the fundamentals of Bitcoin. This does not change the fundamentals of what's happening with strategy. Yes, there's a massive drop on it, and they can continue to manipulate strategy all day long. At the end of the day, strategy is not going to get liquidated. Bitcoin would have to drop down to like $9,000 for there to be any concern with this. long-term strategies game plan is still super solid. It's why I continue to hold on to the stock, and I will hold on to the stock. So, whatever they're going to do to manipulate it, people want to buy Bitcoin at a low price. Lots of manipulation going on from Tom Lee's video where he just shared glitches in software. This does not mean that the fundamentals of Bitcoin have changed, or the fundamentals of MSTR have changed, or that the fundamentals of BMNR have changed, and the fundamentals of Ethereum have not changed. Yeah, the price is down. It sucks. Nobody likes it. I am holding through it. With BMNR, my primary strategy is trading through it. So I just trade. I pick up more shares at the bottom. And when it swings back up, I'm going to be a happy camper. And I think the people who hold not financial advice will be happy campers with it. Yeah, and I'm in the same boat with BMNR. I bought in at $60 share price back in 4 months ago when it was first new, and then I traded my average price way down through trading. And I also bought some more BMNR I bought more like a week ago, and then of course when I buy in, I then trade more. So I trade, I buy in, I sell out, I buy back low. Okay. So that's what's going on. If you want my trading strategy, you can grab it down below. It's somewhere here. I can share with you this, and you can also get my book for free. A lot of my friends that I've given this book to are raving about this book. It's like opening their eyes to a whole new world that's going out in the marketplace. And I do think, Wall Street wants to get in the game, and there's no secret that they're manipulating stuff, and they've been manipulating stuff for years and years and years. It's kind of how Wall Street's been doing their thing for a long, long time. And ultimately, that's what's happening in the market right now. So my screen did not share, so I'm going to make sure that I share my screen and you see this. So there it is. Get my book, get my trading strategy. You can snag that. I also want to give you a little history here on the I had a slideshow prepared for you, but I wanted to go live fast and just go through this. But here's basically the drawdowns. If you look at the 2020 to 2021 bull market, in March of 2020, we had a drawdown first with Bitcoin from 10,500 to 3,800. I started buying Bitcoin in 2018 when it was around $3,000 and $2,000. I was also mining Bitcoin then. And then in 2020, I went heavily into Bitcoin, called my brother. I said, let's go in on this puppy. And I remember this point when it was at 10,500 and dropped down to 3,800. This was during the 2020-2021 bull run. That is a massive correction, 63%. August to September 2020, Bitcoin drops from 12,500 to 9,800, 22% correction. January 2021, 42,000 to 30,000, 29% correction. February of 2021, 26% correction. April and July of 2021, 55% correction. And that was not the top. Okay. So we know that this is a different cycle than historical bull runs, but it is not uncommon for Bitcoin to drop down 30 to 40% during a cycle. 2017 drawdowns with Bitcoin. 36% during the bull run, 33% during the bull run, 40% during the bull run, 34% during the bull run, 42% during the bull run, 30% during the bull run. All drawdowns happening during that bull run. 2024, 2025 bull run, similar drawdowns taking place as well. Bitcoin drew down 23% in 2024, 24% in 2024, 26% in 2025, 27% in 2025, and now it's down 37 or 38% or whatever it is. Okay. So could we have hit a top? Everything is possible. Is it possible that we drop lower than we are right now? Absolutely, it's possible. Ultimately, you should prepare for anything. I am preparing for the long-term hold of Bitcoin and strategy and MSTR, Bitcoin and MSTR, and I will continue to trade BMNR. The fundamentals of Ethereum have not changed. There's more and more people going onto the blockchain in terms of institutions. If you haven't watched my prior videos, go watch them. But it just shows you that this kind of manipulation shows that Wall Street's in the game. This kind of interest of the number of companies that are moving on to Ethereum shows that Wall Street's heavily in the game. And if you're Wall Street, you want to pick up Bitcoin at a low price. And how low they'll push it, who knows? But there's serious manipulation, and they're going after Saylor. If Saylor's deal was so bad, how come he's getting attacked so much? I mean, just use common sense, right? If Saylor's deal is so bad, and like what he's doing is like he doesn't know what he's doing, and he's doing this, and he's doing that, and he's doing that, and all you see are these attacks going on constantly. They're coming after MSTR because MSTR is a threat. Period. Okay? MSTR is a threat. MSTR's move, my opinion, not financial advice, was the most intelligent financial move, one of them of the last several decades ever. All right. And it will continue to be into the next several decades. That's my personal belief on it. I think Saylor's a genius. I've taken the blows just like you in holding the stock. I did buy in a lot earlier than most people, so I'm still profitable. But at the end of the day, I'm not selling, and I'm waiting for strategy to go way back up, which one day it will. I don't know if it's going to happen in 2026. I'm not going to make any price predictions here, but one day it's going to go way back up. And the people who are attacking Saylor right now are going to bend the knee and realize that he made the right choice. Okay. So as far as I'm concerned, strategy as a stockholder, is it volatile as hell? Absolutely. Do you have to have the stomach for it? Absolutely. If one doesn't understand Bitcoin, should they ever invest in strategy? Absolutely not. If one doesn't understand this marketplace and hasn't lived through bull runs, should they be looking at strategy? I'm speaking theoretically here, not financial advice. But should they be looking at strategy? They should be studying the model. Anybody should be studying the model. And Wall Street is studying the model. And everybody wants to be like Saylor right now because they want Bitcoin on their balance sheet. And that's what's going on. So overall, somebody says here, been averaging down on BMNR, finally averaged to the $30 range. That's amazing that you're averaged at the $30 range. I bought in BMNR at $60. And I've traded down my average price. I don't know what it is right now. My last time I looked, my average price was around $47 or $46, and I continue to trade it. So here you have it. Okay. So I believe fundamentally in what strategy is doing. And so I'm sharing this with you, just my viewpoint. You have to do your own research. You have to do what's right for you. Everybody's in a completely different situation in the marketplace. Everybody's got different backgrounds, different businesses, different lifestyles, different times where they might have bought in or didn't buy in, different families, different needs. No one suggestion can be made for every single person in the marketplace. But we can talk theoretically about the fact that Bitcoin is just, it's a winner. It's a winner. It will continue to be a winner for the next decade or 2 decades. It will continue to get attacked. It will continue to get manipulated, and MSTR will get attacked harder because anything that has this type of turbocharge upwards also has the same type of turbocharge downwards. And that's what you can expect from MSTR. When the times are good, they're amazing. And when the times are bad, they suck. All right. Doesn't change the fact that their fundamentals are extremely strong in terms of what they're doing. All right. So I hope this serves you. Ultimately, you got to make your own decisions. Is there always a chance of a bear? Yes. Do I think that we're heading towards a bear? No. Do I think we could head lower? Yes. And what's the time horizon? I don't want to make predictions for when things are going to turn around. I just believe in the future they're going to turn around. And we're going through max pain right now. And again, I hope you took the data that I shared on Bitcoin's drawdowns historically, because this is not an uncommon drawdown in a Bitcoin cycle. Okay. If it continues to go lower and lower and lower, then you really have to look and go, whoa, where are we at in this cycle? What's happening? And do what's best for you. Okay. Ultimately, I'm in the game. And I love the game, and that's why I created Money Game. So go snag my book, read it. If you really want to get strong fundamentals on the current financial system, if you want to understand the Fed, which if you live in this country, you need to understand the Fed. Like you literally need to understand how they operate. This should be taught in grade school. And the fact that the 99.9% of the population, they think they know how the Fed works. They don't know how the Fed works. Go read my book. It tells you how the Fed works. Number one. Number two, if you want to understand just comparable data of the history of finance, and you want to look at traditional investments, and you want to stack it up against Bitcoin, against Ethereum, against BMNR, and about MSTR, I have a chapter devoted to each and a couple chapters devoted to MSTR, BMNR, Ethereum, and Bitcoin in the book, so people get the fundamentals and they understand what this is. One who has knowledge has more confidence. One who has more knowledge and confidence has more control. Again, it's why I trade at the bottom of the market, the middle of the market, the top of the market. Because even though my stock is going down too, I am picking up more shares. All right. So one who does not have knowledge in an area will not be in full control. They will be total effect and they will not be cause over the area. Knowledge comes first. All right. Get my book, go read it, give it to a friend, give it to somebody who might feel a little bit frightened right now and go read the book, get the data. Okay. You'll appreciate the data. I also come from the financial services world. At 21, I started in traditional finance. Okay. I spent 13 years in traditional finance. I was a partner with one of the highest companies in the land in traditional finance. I know what goes on behind the scenes. I know how it operates. I reveal it in the book. You need to get it. You need to understand it, because when times get tough, which they are right now, the thing that gives me great confidence in the future is the fact that traditional finance for me is not the way. And all of it is revealed in my book to show you, like, this is really how the traditional financial world works. Everybody should read it. It should be required reading education, because I wrote everything at a 5th grade level, because I don't want anything over a 5th grade level. I think this is like, I'm not a paid shill, buddy. So, you know, if you get a problem with it, get off the channel. Okay. I'm not a paid shill for anybody. I'm here to support you guys and help you. All right. So at the end of the day, I'm going to express my opinion. I'm going to express it vocally. If you want to express on my channel vocally, feel free. But if you don't like what I say, you can leave. All right. Point blank. All right. So here's the deal. End of the day, here's what I believe. I believe that the future of digital finance is here. The data points to the fact that it's here. You have large companies, large institutions that have moved on to Ethereum. They continue to move on to the blockchain. You have manipulation that's going on with Bitcoin right now in the marketplace. You have problems that happen in the software with the liquidation of $19.1 billion in liquidations. You got problems. Anytime you're going to play the long game, anytime you're going to play in a volatile asset, you're going to have ups, you're going to have downs. At the end of the day, this is what I signed up for. And ultimately, I want to help the world. I created this entire new YouTube channel with nothing to give anybody except content and advice in terms of what I think for myself personally is going to happen in the marketplace long term. And so here's what I think. Here's my opinion. You got to figure out what your own opinions are and what's true for you. But I wanted to give perspective, because at the end of the day, giving perspective on how traditional finance works versus digital finance is super important. It's comparable data, right? If I want to know the difference between X and Y, I want to look at the data on X and Y. So you look at the data on traditional finance, you look at how they operate and how they work. And when you see how traditional finance works and you have all the data, then you can look at the data on Bitcoin, and then you can make the best decision of what's better. Is the new world of digital finance better, or is the old world of traditional finance better? And I think you're going to find some conclusive evidence there when you compare the data. So hope it serves you. Take a look, strong and hard. Go get the book. It is free. Okay. It is free. 100%. Snag it. All right. And ultimately, I hope this works out for you. I hope that long term you and your family win. And I hope that you continue to have, whatever viewpoint you hold, I hope it works out for you long term for you and your family. All right. So stay well. Have a great rest of the day. I know it's tough times. I do understand. I do duplicate what you're going through. Hang in there, hang tough, and ultimately do your own research and make sure you get as much data as possible so you can make the best decisions for yourself. None of this is tax advice, financial advice, or legal advice. Have a great, tremendous rest of the day, and I'll see you on the other side. Cheers.